Welcome to The Explainer. Today, we're diving deep into the actual mechanics of U.S. tax compliance, translating what feels like a complex, intentionally opaque web into a clear, actionable roadmap for your business. Whether you're just spinning up a weekend project or managing a multinational entity, understanding the underlying mechanisms of this system is absolutely crucial. As expert analysis indicates, once you grasp how the tax system actively categorizes and tracks data, like precisely distinguishing your active labor from passive income, this whole system goes from being a massive barrier to a highly manageable set of rules.
If you've ever felt completely overwhelmed by the alphabet soup of tax forms and regulations, look, you're definitely not alone. It's a really common frustration, but you have to shift your perspective here. Understanding these documents is the absolute key to protecting what you earn. These forms aren't just pointless bureaucracy. They are highly specific data points feeding into a massive financial tracking algorithm. Mastering them means ensuring your business's data is interpreted correctly by the system, which is exactly how you successfully avoid automated red flags.
We're going to walk through this entire architecture together. Here is our agenda. First, navigating the tax maze. Second, side hustles and 1099s. Third, structuring your small business. Fourth, global income and forms. And finally, resources and taxpayer rights. Let's get right into it.
Section 1, navigating the tax maze. We're starting with the foundational digital infrastructure provided by the government to keep you organized.
The infrastructure of tax collection has fundamentally shifted, and aligning yourself with this new digital reality is step one. To avoid delays and paper jams, the system heavily emphasizes a complete shift to digital management. Relying on paper forms introduces human error and massive processing lag. According to expert reports, utilizing online business tax tools isn't just about convenience anymore. It's a structural necessity for data integrity. These platforms lock down your data, streamline your reporting, and give you instant access to the exact compliance reports you'll need as your operations scale. When it's actually time to pay those estimated quarterly taxes or your annual bills, these three digital steps are your most secure route. The cause and effect here is incredibly simple, right? By completely bypassing paper checks and using direct pay or electronic payment systems, you eliminate the friction of processing times. More importantly, you drastically reduce the probability of your funds being misapplied by the system. Section 2, side hustles and 1099s. Now let's move to a situation many of you are navigating right now, managing income from freelancing or digital side hustles. This number right here is absolutely critical. $600 is the upcoming 2026 reporting threshold for third-party network transactions. The mechanism is designed so that if you sell an item online via a payment app, or maybe drive for a rideshare platform, crossing this exact threshold automatically triggers a reporting form. It represents a rapidly tightening net of digital income tracking. But here's the non-obvious detail you need to understand. Reporting does not automatically mean taxation. If you sell an old couch online at a loss, you don't owe a dime of tax on it, but the algorithm still demands that data point once you cross the $600 mark. Now, applying a strict analytical lens here, this table brilliantly illustrates how the system systematically fragments your income. Notice the critical structural distinction between the 1099 MISC and the 1099 NEC. Historically, these were actually combined, but the system deliberately separated them to isolate non-employee compensation via the 1099 NEC. This specific form is exclusively designed to capture the exact transactional data of the active freelance economy. Conversely, the 1099 MISC is now strictly reserved for alternative, often passive revenue streams, think royalties, rents, or cash prizes. The implicit assumption in this structural design is really clever. By actively separating your hard labor from your passive income, automated algorithms can instantly flag discrepancies without any human intervention whatsoever. For instance, they can check if you correctly paid self-employment tax on active labor. Misclassifying these forms means misaligning your exact revenue stream with highly calibrated tracking algorithms, which is a fast track to an audit. If your business is the one actually issuing these forms to contractors, you've got to remember that the mechanics of filing have changed. Filing 10 or more informational returns now legally mandates electronic submission. Utilizing the Free Information Returns Intake System, or IRS, is the most efficient way to process these. It allows you to bulk upload data and get instant confirmation. The cause and effect is immediate here. Failing to use electronic systems for 10 or more forms triggers severe automatically generated penalties. There's no wiggle room. Section 3. Structuring your small business. As your side hustle scales into a full-fledged operation, how you officially structure your business dictates exactly what you have to report. Your corporate structure is literally the lens through which the tax system views your revenue. Notice the sharp contrast here, because the underlying mechanism is fascinating. A simple foreknown single-member LLC might only need to file an informational return. The goal there isn't immediate taxation, it's purely data extraction, ensuring the government has a trace of global transactions. In stark contrast, a C corporation must file a full Form 1120. The cause and effect is absolute. Choosing a C-Corp structure locks your entity into a rigid, taxable reporting framework entirely regardless of whether you're actually profitable. Even if you aren't strictly required by law to have an employer identification number, obtaining one for free online is a crucial strategic step. Think of it as your business's digital fingerprint. This 9-digit number acts as the foundational digital identifier for your operation. It is the prerequisite mechanism for opening commercial bank accounts, processing payroll, and establishing a rock-solid professional barrier between your personal and business liabilities. Structuring your business properly also opens the door to incredible financial incentives. You have to realize the tax code is essentially a series of behavioral nudges. By hiring from specific targeted groups or upgrading your commercial fleet to clean energy vehicles, you trigger massive tax credits. For example, upgrading to clean commercial vehicles can trigger credits of up to $40,000 per vehicle. These aren't just deductions that lower your taxable income, they are direct, dollar-for-dollar reductions in your actual tax liability, specifically engineered to reward certain business operations. Section 4. Global Income and Forms. Next, we're crossing borders to decode the unique challenges faced by international workers, foreign contractors, and global entities. The rules shift dramatically once physical borders are crossed. The crucial point here is understanding the concept of effectively connected income. The implicit assumption in the tax code is that physical presence dictates your liability. So if you're a foreign freelancer doing remote digital consulting from abroad, with zero physical U.S. presence, your income's generally not considered effectively connected. This is a massive, actionable insight. Your physical operational footprint directly causes your tax status to shift from paying actual taxes to merely filing informational data. Now, what about your residency status? Your legal status on the very last day of the year is a mechanical trigger that dictates your entire filing strategy. The system quite literally takes a snapshot of your status on December 31st, and that single day determines how your global income is treated for the preceding 12 months. And this brilliantly illustrates exactly how that snapshot is applied in practice. If you are a resident at year-end, you file the standard 1040 and attach the non-resident form as a statement to account for the early part of the year. But if you are a non-resident at year-end, the architecture entirely flips. You file the 1040-NR as your primary document. It's a highly structured binary system. You either fit into bucket A or bucket B, based solely on where you physically and legally stand when the clock strikes midnight on New Year's Eve. If you're based outside the US and landing American clients, you must understand the withholding mechanism. Before you get paid a single cent, you must submit one of these W-8 forms to your client. Without this exact documentation on file, US companies are legally mandated to withhold 30% of your payment right off the top. Submitting the correct form, the BEN for individuals or the BEN-E for entities, is literally the only legal mechanism available to bypass this severe revenue drain. Section 5. Resources and taxpayer rights. Finally, let's shift our focus from strict compliance to actual empowerment.
The system is vast, but it's built with specific fail-safes and advocacy channels. When seeking professional help, choosing the right expert is paramount. Why? Because their credentials mechanically dictate exactly how far they can go to defend you. It's the difference between having a friendly advisor and having an actual legal shield. Enrolled agents and CPAs hold unlimited representation rights, meaning they can advocate for you in any dispute with the authorities. Uncredentialed preparers simply do not have that legal standing, leaving you totally exposed if an audit ever occurs. But you've got to stay vigilant. The system places the ultimate legal liabilities squarely on your shoulders, regardless of who actually types up your paperwork. Avoid any preparer exhibiting these red flags, especially those demanding a percentage of your refund or asking you to sign blank documents. Think about it. A fraudulent return filed in your name by a shady preparer is still, at the end of the day, your legal problem to solve.
But what if you do find yourself trapped in a systemic glitch? Maybe you're facing unfair penalties, delayed payments from federal contracts, or totally broken agency processes. Well, these independent advocate agencies exist specifically to intervene on your behalf. Filing Form 911, for instance, triggers an independent review. It literally forces the system to hit pause and address the mechanical failure that is affecting your business. Now, here's a non-obvious detail that might actually make you smile. Unlike many international systems that demand government-approved, rigidly formatted invoices every single month, the US system actually offers a surprising amount of operational freedom. The tracking algorithms care about the final, accurate annual data flowing through those 1099s and 1120s. They really don't care whether you used Comic Sans or Times New Roman on your daily client invoices. By understanding the deep mechanics behind these forms, from the precise separation of active and passive income on those 1099s to the year-end residency snapshots, you elevate yourself. You go from merely reacting to confusing rules to actively managing them as strategic data points. So, armed with this level of expert insight, ask yourself, is your business data structured in a way that triggers an automated headache? Or are you going to use these mechanisms to seamlessly unlock your next phase of global growth? The choice is entirely in how you structure it. Thanks for joining us on this explainer.